And that takes us into the next panel. Climate change, ladies and gentlemen, knows no borders. It will not stop before the Pacific Islands, and the whole of the international community here has to shoulder to bring about sustainable development. Pointed out Angela Merkel. Now, these are apt words from one of the most powerful women in the world. A universal, stark, and inescapable reality. Hence, the need of the hour for businesses across the globe is to go the ESG way to plan their role in sustainable development. ESG transformation is catching on as a new age movement that companies have to embrace for better survivability and performance and the overall good of planet Earth. Environmental, social, and governance criteria are a set of standards for a company's operation that socially conscious investors now more and more use to screen potential investments. Environmental criteria consider how a company performs as a steward of nature. Social criteria examines how it manages relationships with employees, suppliers, customers, and the communities where it operates. And governance deals with a company's leadership, executive pay, audits, internal controls, and shareholder rights. This is one of the most significant trends to hit Indian shores. In the coming years, this theme will drive strategy for corporates and investors, and thus will shape a sustainable future for corporate India. This is indeed the hour of reckoning, the moment of truth to sound the bell. I'd like to invite on the dais the speakers of this session. Hetal Dalal, President and Chief Operating Officer, Institutional Investor Advisory Services, joining us virtually. Dr. Mukund Rajan, Chairman eCube Investment Advisors, joining us virtually. Rishi Pardal, Managing Director and CEO, United Breweries Limited. Nalin Moniz, CIO, Alternative Equity at Edelweiss AMC. Ankur Thadani, Partner, TPG, Growth and Rise Fund. Shruti Rajan, Partner, Trilegal. Please join me on stage. I'd also like to invite on stage the moderator of this session, Srinath Sridharan, co-founder, 4P Consulting. Thank you all for taking the time out and joining us here to be a part of this panel. I now hand this panel over to the moderator.
Hi, good afternoon. So, a provocative topic, ESG. I mean, is it the new buzzword or is it the new mantra? We used a word called strategy for 2 decades to probably even delude ourselves. And now we have ESG as the new space. Having said that, we have practitioners, we have advisors, we have investors on this dais, on the panel. And it'll be interesting to see the perspective, especially now that ESG has got the regulators' attention, the capital market regulators' attention. The top 1,000 companies to file their BRSR from next year. The investors are demanding and expecting higher standards of all the 3 space, which is E, S, and G. But what does it mean? And how ready are we? And this panel is going to actually ask those questions. We have Hetal and Mukund, both who have seen it from the advisory space as well. And is India Inc. actually ready with talent? That's one question that I want to provoke this panel to address. Are we ready for granular disclosures? We disclose, but how granular are we? How higher standards can we set to ourselves? And do we have any learnings from the global markets that each of you come from? What are those that we bring in? And more importantly, is actually ESG a new thing at all in India? I mean, it's not as if India has not had any of these aspects. We have culturally imbibed our consciousness towards societal norms about environment and governance. So there's something newly packaged, but not necessarily something new. So with that, let me open the panel with Hetal. Hetal, your points, please. And what we will do as a format is each of the panelists will go around for 3 to 4 minutes for their observation, and then come back for pointed interjections and questions. Hetal, over to you. Hitala, you're not audible. Yeah, we can hear you now. Thank you.
End up here, right? It's begun as the tragedy of commons. Most businesses, whether you look at it in India or even globally, effectively looked at profit maximization at the cost of all else. So therefore, in pursuing the personal gain, the common good sort of got lost. And this is true for governments, it's true for individuals as well. It's not simply penning corporations, but we're here to talk about, corporations, and therefore you sort of focus around that. So there you are. Therefore, you need to have a more structured mechanism of thinking about profits, people, and the planet. Essentially, your ESG, right? But for a company who owns the ESG agenda, I mean, if you sort of let me take a leaf from what C.B. Bhattacharya from the University of Pittsburgh keeps talking about. Is the hierarchy of how the ESG agenda gets addressed in companies, and it's a little bit like the Maslow's hierarchy of needs, right? At the very bottom level, you have compliance. Regulation says I need to have fire safety everywhere. I have it, right? Then you move to sort of risk mitigation, where you say that I'm going to set up a plant in the interior of the country. Should I not just adopt the entire village, give them, education, give them health care, and therefore ensure that I'm able to always access labor and the labor will not be military, right? The third is to say, is it a competitive advantage or opportunity generation? So instead of using cotton, we're using modal, it uses less water, it's biodegradable, comes from trees. So therefore, you should buy my product vis-a-vis, everything else. And really, the fourth level, which is essentially what you call, the self-actualization in the Maslow's model, is to say that are you really running the business through the lens of sustainability? And that's the fundamental way. If you do something like that, then every operating decision that you make will have the focus of profits, people, and planet. So given where we are, right? So how do we pull ourselves from here? And there are a couple of things which all need to work together. One is to say fundamentally addressing corporate culture. Now, if we keep asking the questions that do boards even address corporate culture is one of the things that we look at. But given that ESG has far more operational mechanics to it, right? In terms of saying, how do I, if I have to reduce carbon, how do I do that? Do I switch to renewables? Can we streamline the manufacturing, reuse waste, reduce waste? A lot of these decisions are operational in nature. Therefore, one is simply addressing corporate culture and the fact that that needs to change. It is no longer about squeezing the last penny or juicing the last rupee, but to simply say that I am now looking at a much more holistic and optimization kind of a context, right? The second is setting responsibility at the leadership level. How is executive remuneration really set? When we look at disclosures, and today we track 900 companies, right? When we look at disclosures of CEO compensation, they're very, very sketchy. Even in terms of just, how is variable pay determined and paid itself is sketchy. In most instances, you'll get 4 parameters. Most of these will be return ratios, profitability, sort of revenue growth and market share, those kind of financial parameters. So therefore, setting responsibility for ESG at the leadership level, embedding some of these targets into CEO pay or even the executive leadership pay is really what will drive the entire system to work towards it, right? I mean, what gets rewarded will get measured and therefore get done. It's a very fundamental issue. We looked at in 2021, we looked at the top 100 companies CEO pay, right? The top 100 companies account for about 70% of market cap, give or take a little bit here and there, right? And if you look at the alignment of pay versus performance, and this is during the COVID period, right? If you look at 2019 to 2021, essentially 2020 and 2021 is really where the COVID period hit. Right? We've seen CEO pay actually outpace company performance for sure. And the number of companies where this has happened has actually increased. So CEOs have still got themselves paid while a lot of the ecosystem is struggling around COVID. Same issue with suppliers, right? Number of companies which delayed payments to suppliers has actually increased. during the COVID period. And the COVID period has actually impacted SMEs far more. Most of the suppliers are SMEs. So therefore, you are saying that, while there's already stress on the SMEs, you increase and delay payments to the suppliers, increasing the stress even further. And that's really the gap in how sometimes ESG gets looked at. So therefore, ensuring that there is leadership level, you're actually embedding some of these metrics into CEO pay will sort of allow the entire system to therefore look at itself more holistically. Right. And the third is to say that there has to be an ecosystem that rewards better ESG performance. I mean, there was a factoid which said that ESG funds have clearly outperformed most of the indices, and that's really where the investors sort of kick in and they have a role to play. And we've seen that even if you just measure very narrowly, look at governance itself, right? Better governed companies tend to perform better on price as well as have lower stock beta. And you're now seeing this in terms of the funds of the performance of the ESG funds as well. And it's not just sort of looking at it from the equity standpoint, right? Even from the lender's perspective, and actually sometimes more so from the lender's perspective. One is to say the banks look at their own ESG structures, right? And for them, it's a lot more social and what do we do about e-waste rather than environmental. But what do they do on the lending side? Are they looking at, the entire sort of ESG practices of companies? And finally, ESG poses long-term risks, right? So therefore, if you're saying it's long-term risk for a lender who's going to be sort of lending money for a 5 or a 10-year time frame, depending upon the nature of the project, this is something that lenders also need to sort of get into, and more so. Regulators also have a role to play, and as Srinath was talking about the fact that the whole BRSR has come in, and really what is that? That's the regulator pushing companies to disclose data with essentially the view that therefore there will be some kind of a tracking mechanism which companies will finally build in. I don't hold a view which says that ESG is new to India. It's as Srinath says, I tend to agree with that. That culturally we think of the planet and the environment far more. It's embedded in how we look at some of these things. But putting data and tracking it brings a lot more clarity. It creates a sense of comparability and therefore fosters a certain set of competition as well among companies. And I think that's, to me, this is really some of the ways in which an ecosystem can be built around to push companies forward on their ESG trajectory.
Thanks, Hetal.
That's okay.
Thank you. So this is where I want to bring the industry practitioner. I mean, I want to bring in Rishi with a provocative question from the man who runs the King of Good Times. Does goodness pay? Does ESG actually pay?
Well, what's good for the planet is certainly good for business. And I was going to say, you asked the question, is it a buzzword or is it here to stay? My personal view is it's here to stay. And really there are 4 things that are driving this, right? On the one hand is the real impact on the planet. So you have a situation, if you watch every year, that the Earth overshoot day, the day when Earth can stop supporting its consumption needs, keeps on coming forward and forward in the year. I think it's reached up to August now, or even earlier. And as a result of that, actually I find in my professional journey, we find as a company that consumers, especially the millennials, the Gen Zs, are asking the right questions of brands. They're not just convinced to consume, but they want to know what lies behind that choice, what practices, what do the brands really stand for, how do they produce, what do they put on their packaging, do they treat their supply chains fairly. And this is a real huge pressure on all of us in business. And when you combine that then with now the kind of work that is happening in the investment world and folks taking the lead on evaluating companies on this parameter, I think it's really forced companies all over the world to take ESG at the heart of the agenda, right? Hetal spoke about whether the metrics of ESG find a role or a place in CEO compensation. Well, I can start to see that they do. So the journey is still very long. We are start of it. Not for a minute do I believe that this is going to be smooth or linear in any way. But certainly from my perspective, doing business with a purpose and doing well by doing good, these are all becoming center of plate. And over the next few years, this will become even more important, in my opinion.
Thank you. Thanks, Rishi. So I want to bring in Shruti here from the regulations point of view. I mean, sometimes I wonder how does somebody actually keep up and cope up with regulations and the circulars which keep coming in our Indian regulatory space. And especially a topic which is a long haul topic, as Rishi and Hetal also pointed out. How does one actually plan for not just compliance, but more about the spirit of it?
So, I recently read an article which said, who's going to save the ESG movement from itself? And the answer at the end of it was the regulators. Today, the only thing that stops ESG from becoming tokenism or becoming a marketing gimmick is really how regulators, I wouldn't say regulate, but at least exercise some supervision and oversight over the industry that puts out the information, which is the companies, and the industry which consumes the information, which is people who prepare the reports or investors. And I think we've done a fantastic job so far in India. As I'm sure all of us know, SEBI is pioneering the space towards regulating ERPs, and you will very soon have a set of regulations that govern how ESG rating providers must be regulated. The draft is still in a consultation paper form, but whatever little we've seen, I think is very encouraging. It's principle-based, doesn't go into the nuts and bolts of, what are the symbols you should use, what are the metrics, benchmarks, etc. But it does thematically lay out what the regulator expects, the minimum standards of behavior that they expect from ERPs. So I think that's one very encouraging sign on the side of the people who are putting together the report that investors and companies will rely on. Equally, from the company's perspective, you have, obviously the BRSR report, etc., that we just discussed. The one thought that perhaps we can discuss as we go on in the panel is really what happens after that, because as a lawyer, my vantage point is naturally one of, say, risk and litigation, and I can't help but wonder that where do these disclosures take you? What is the liability for management? Is there a professional liability that comes from material misstatements? Are you looking at tortious liabilities for environmental claims? How much is too much in what you say? What can go wrong with the rating providers in terms of the reports they put out? I think the list is endless, and yeah, a lot to think about as a lawyer.
Thank you. This is where I want to bring in Ankur. So, as an investor, she spoke about risks, and what are the mitigatory factors that you look at? Otherwise, everything looks rosy. Everything, the buzzword, sustainability, green. How do we stay away from one green shaming at the same time evergreening as well? Between the two, how do you ensure that you actually invest in the right assets?
Sure. Look, I think we all know that, I think as Rishi said and as Hetal said, right, this is not a buzzword. I look at this as a generational challenge and a generational opportunity, right? And they're two sides of a coin. But on your specific question, I think there are two aspects to it. One is the entire market is getting rewired towards the climate economy, right? And it's not just about ESG being one of the things that CEOs have to adhere to, but you think there's a recent Bank of America report that came out which said that globally, companies that actually rank high on ESG benchmarks have effectively 10% lower cost of capital than other companies. Now that is the market forces sort of acting at play and saying that, look, you are now forced to be ESG efficient, you're forced to be ESG efficacious, only then will you get lower cost of capital, right? That's the market playing in itself. But to Shruti's specific point, look, I think the risk is today there are just way too many benchmarks, way too many ways of, in some ways, reporting ESG and measuring ESG, till there is no sort of global benchmark or no global definition of what people have to deliver on. It is very similar to financial accounting, right? I think, I can almost hazard a risk and say that 10 years from now, Rishi would be reporting not just a annual report, which is an audit report, but also an ESG report. And that will have to have a benchmark like you have GAAP. I don't know if people know, right? Accounting standards globally were there for 70 years. Yet it took 8 years for the world to come up with GAAP, which is the accounting standard. We don't have 8 years to wait for the ESG standard, right? The opportunity and the challenge is here and now today. So there has to be that globally accepted ESG benchmark on which companies can and CEOs and teams can actually benchmark and regulators can measure to say, are you up there on ESG or not? And I think that's a key sort of impediment to getting on a globally compliant level.
Thank you. So let me bring Mukund into the conversation. One of the other hats Mukund wears, apart from being an ESG analyst and an investor and somebody been in the corporate world, more importantly, author. One of the fascinating books on ESG. Mukund, you have written the book called Outlast. Do you really believe that companies will actually outlast the markets?
That's what we're discussing, aren't we? No, absolutely. I think in the long term, I think we've heard from the others as well, I think the focus on ESG is going to be a key determinant of success. In the short term, however, different story, both for the kinds of commitments that you see from companies and the kind of pressure points that are beginning to build up in the Indian system, be it from the regulator, from investors and others. Maybe take an example, let's say, of the auto industry. Look at the two-wheeler industry. A few years back, you will recollect the Niti Aayog came out with this proposal to mandate the conversion of all two-wheelers in India to electric by 2025. And huge resistance, I think, on the part of the industry to that. A lot of talk of stranded assets, the kind of investments that had been made in the BS4 to BS6 migration, and this was just one bridge too far for the industry. And guess what's happening today? I think the market pressures themselves are pushing a number of the two-wheeler manufacturers to come out with a slew of electric products. So it does take time sometimes, and sometimes in the short term, the reactions aren't very favorable. But eventually, I think the trend is in the direction of all of these different pressure points coming together and forcing change. And I think a series of global shocks in the last decade and a half have played their role in persuading people that it's better to do these things faster rather than wait. I think going back to the global financial crisis, the Arab Spring, the hashtag #MeToo movement, and most recently, obviously, the concerns around global warming and what you've seen with COVID, the fact that when nature revolts, there's nowhere to hide, no matter how wealthy or powerful you might be. So I think people now get it, and I think the more forward-looking corporations are beginning to embrace ESG in a very positive and constructive way. It doesn't mean that they're going to make changes overnight. Take net zero, for instance. Many of the announcements around net zero are 15, 20, 30 years out in time. Unilever, which is a role model, I think, in sustainability, is talking about 2039. So it's not as if anyone is expecting them, nor are they themselves committing to do something tomorrow or day after. But yes, I think putting in place a roadmap and explaining to the market how seriously they're taking these issues is becoming, I think, a key factor in really sifting the great and the good from the ones who are going to be caught out, I think, by the market sooner rather than later.
Let me bring in Nalin here. Nalin, do we have enough demand? Or do we have enough on the supply side? Do we have enough companies to invest into?
So Srinath, am I audible? I couldn't agree more with the panelists that ESG is one of the defining trends of this generation. And it's not just the right thing to do from the heart, it's the right thing to do financially as well. If you did a very simple analysis of a company that was earning a 15% return on equity and 10% sales growth, 73% of the company's value is determined by its terminal value. And that is what is impacted by ESG in the long run. However, there is today a big slip between the lip and the cup. We all acknowledge that ESG is important, but at least domestically from investors, there simply isn't enough demand for ESG investments. The mutual fund category is only 12,000 crores in aggregate. Schemes have not been able to perform. In fact, over the last 5 years, the BSE 100 has delivered 14.5% versus 13.6% for the ESG category in average, and not a single scheme has been able to outperform. The beta of ESG funds is 0.97. So it shows that there isn't lower risk when you add these ESG filters. So there is a lot that is desired from the implementation perspective, and that is holding back the demand from investors for these kind of investments. If we can fix that, the demand is going to be unlimited.
So I have a follow-on question. How granular are those disclosures or the inputs that you take into ESG investing? I mean, at this point in time, as Ankur mentioned, we don't have much of granular data that's available on ESG space. So when you make a call, when you take a call on a company basis their disclosures or your primary research, what are some of those red flags that typically alarm you?
So Srinath, we also manage money for Indian investors on the mutual fund, AIF and PMS platform, and we also manage money for European investors on the UCITS platform. If I were to contrast disclosure standards on the UCITS platform, they are incredibly granular. We are being asked about energy usage, water emissions, unions, executive pay, gender gap ratios, and so on and so forth. But domestically, nobody is even measuring this. Nobody is asking us about this. And please pull up the portfolios of any ESG mutual funds. They look indistinguishable from a typical multi-cap portfolio. So we have a long way to go in terms of standards being adopted and adapted domestically.
Sure. Thank you. I want to bring in Shruti here. You mentioned about litigation risk as India moves on to the ESG journey, and then follow it on with actually asking the CEO of a large corporate saying, how is he going to find the litigation risk when he rolls out as the leader? Because there's a culture of, if there's a culture of fear, a market fear, saying that I am liable for litigation, I mean, you're not going to be able to attract enough talent at the senior level.
True, but I think, look, litigation vulnerabilities it's a good sword to have hanging over your head at some point, right? Because it keeps you honest, it keeps you real in terms of the information that you want to put out. I think that risk in itself is a litmus test in terms of what is it that you want to say, how far do you want to go in terms of, just to take the example of what you said from a social parameter standpoint, how are you really packaging the gender gap or the wage gap in your BRSR as and when it comes out? How are you, packaging in your annual report the steps you're going to take to bridge the gap? Those are statements that, just like we do for IPOs today, if they're going to become statements which are out in the open and, which cannot be substantiated in any manner, you will run the risks that companies today run for making, open-ended statements as a part of their IPOs. So I think the basic principle does not change. The fact that there is a litigation risk, I would think, it actually enhances your ability to say it like it should be and make sure you're covering for it.
Yeah, I mean, if I look at it really, for me, it's first clarity of purpose, right? Where do you want to go? Everyone is today agreed that the current ways of doing business and the legacy ways of doing business has to change. If I was looking at the World Economic Forum, I think they've come up now with a list of 21 plus 34 metrics that constitutes, the right framework on ESG in terms of metrics to be looked at. So if that's the clarity of where we want to go, I think the starting point is honesty of where you are. And so therefore the first few years in terms of the disclosures, in terms of bringing out or putting the moose on the table, I think is acceptable. Because that's just the reality of where we all are. And if we stop censuring people for where they are, and look at that clarity of purpose and the honesty and transparency with which they are starting their journey, and then periodically review the progress, I think that's the way to go, right? In the fear of getting a lot of litigation or being punished too early in the journey, I don't think any progress is possible. The reality is that all of us have consumed more products and services collectively as a nation, as a globe, than the earth could support. And now that we've started this journey, we've all got to be clear that there's going to be first the bad news before the good news comes along. So I think that's the way to look at it.
Thank you. So let me bring in Hetal here. Question, you track the regulation and the corporates who toe those lines or don't toe those lines. And how competitive are our ESG framework? I mean, they're still evolving. And how competitive are they? And do you think there are any learnings for us from the credit rating space? I mean, we've had credit rating agencies for long. and yet we seem to be missing early warning signals in the markets. So what are the learnings for the ESG rating agencies?
It's the answer a lot to extent is a lot of it is developing. Let's look at the credit rating model, and I know that's easy to say that rating agencies have failed. I think the one piece I would recommend you also think about is the fact that all rating agencies haven't failed all of the time. Some rating agencies have failed some of the time. The role of rating agencies is essentially where you are on the ESG framework as well. They all started at a point in time where interest rates were fixed. So what they allowed when they started off was access to finance, right? And over a period of time, that came into pricing, and rating agencies have been an sort of instrumental player in terms of developing the debt markets. And this is not in defense of the rating agencies. I'm simply saying that drawing a parallel. So today we're saying that you have, this entire ESG ratings which are coming out, or rankings which are coming out. SEBI's put out a paper, and SEBI's idea is to create a certain degree of comparability or a certain framework around those who are also who are going to provide these services, and therefore create some degree of streamlining and control as well for SEBI, right? I think because one of the challenges of any model and any framework is the quality of data itself. Today for corporate India, and it's again a mixed bag. When you look at some of the larger players, they have far more sophisticated tracking mechanisms than the relatively smaller players, right? And the idea, therefore, for the country, for the regulator, is that you put all of it together, and the market itself has to move forward. And therefore, having some of these, evaluations or independent assessments and disclosure requirements, therefore, compels the market to get onto the train, so to speak, right? So fundamentally, one is just the challenge around the data. And to be fair, the data challenges are there across the world. You talk to any of the companies, even globally, this is comparability of data becomes a challenge in the ESG space. You have the ISSB, which is now going to come out with standards for sustainability reporting. And hopefully, much like the accounting standard, these would create a certain degree of comparability. But I think the models, by and large, are still to be tested as far as Indian markets are concerned. So it's a little too soon to say, but I would say that the evolving and the degree of expertise that you need is also developing. Nothing that you start from the initial stages, or when you decide to start something, you're not going to get that talent in the market. It all has to be developed, and everybody learns along the way. And that's really where the entire ecosystem for the assessments is as far as India is concerned.
Bring you into the conversation again. If there were a wish list that you seek from corporate India in terms of behavioral traits or value system, you spent a lot of time in an enterprise which emphasizes values or value on values, but that's not a very, very common trait in corporate India. So what are those 2-3 wish lists that you would have?
Very basic, I think, asks. The first is codes of conduct. It seems something very basic and very simple, but many companies don't actually have a particularly refined code of conduct, if indeed they have anything at all in their organization. You talk to many of the MSMEs, for instance, they've even not heard of this concept of having a code of conduct. So I think trying to put down really what it is that is important to your organization by way of values, and then trying to link that to really your vision and your mission as an organization. These are words we grew up with, right? The basic things that you try and put together in a corporate, and yet most companies don't have them. Many of the even larger companies in India today have vision or mission statements that are actually not fit for purpose and that are now quite dated. I guarantee you, if you do a search of many of the mission statements of corporate India today, you'll find that actually in the last 5 years, they've not really been tweaked or changed. And considerations like sustainability, considerations around employee well-being are somewhat new for many of these companies. They've not actually kept pace. So I think the first place I'd look for is, have you actually marshaled all your resources to figure out as an organization what it means to do business in this country? The second is another thing that we keep hearing about, corporate purpose, right? Which is really your mission. Are you a purpose-driven organization? What do you really care about? And how do you align your stakeholders behind that? So these are, I think, very basic asks, which if you apply your mind to, can then actually result in significant streamlining of all the things it really stand for and how important ESG and sustainability considerations will indeed become to your future. If you don't go through that exercise, then I suspect you're going to be ending up, initially at least, with a lot of sort of tick the box, compliance based efforts, which don't actually go into the heart and soul of who you are as an organization and what you really stand for.
Good. Ankur, this is a question for you. The market general perception about ESG is everybody thinks you'll have to retrofit to get there, and that it's going to cost a lot of money to get you to ESG compliance. And when you are seeing deals, when you're speaking to companies to invest into, what are those concerns that they're flagging off?
So it's not surprising, right, Srinath? I mean, when a market needs to rewire, when an economy needs to rewire, it needs fundamental capital investment, right? There are some reports out there which say about $150 trillion of capital is required for the world to sort of become climate net zero, right? Now, that kind of capital somebody has to provide. Public sources of capital, private sources of capital have to step up and participate to provide that capital. So capital need is certainly one aspect, right? Second, new business models will evolve. And companies either have to adapt to new business realities or have to essentially ensure that they execute to that, right? And again, I'll draw a parallel here, technology disruption. Most companies didn't realize how to adapt to technology disruption for the last 2 decades. And you can see how many of them have suffered versus those who have adapted and how well they performed, right? And that expertise on how do you pivot your business model to become compliant with the ESG and to become ESG efficacious is going to be very similar to what a tech disruption did to these businesses. And it's top of mind for CEOs to think about, right? And some of the companies are thinking of it as a spotlight to say, I'll focus all my effort and try and get to ESG compliant because that can create disproportionate value. Some are being forced to do so by consumers like EVs, right? And I think market forces will sort of drive that. So I would say entire business model rewiring that needs to happen and capital that needs for that to be executed are probably the two most biggest challenges that we need to think about.
Sure. So Rishi, you have seen multiple markets, global markets, and your company is your brand owners in multiple markets. And how do you see the ESG construct change market to market? And where would you peg India? While we all understand we are on the cusp of change, and two, if there were any learnings that India is better off in, what are those?
Yeah, let me start with the second part of the question, right? So we recently had majority stake change in our company, right? And we got one of the 3 global brewers to now own a major part of the company. And that company, Heineken, has made a lot of public commitments on brewing a better world. And as part of the brewing a better world in terms of what's the kind of impact it has on governance, how they are transparent about all these metrics that are going to get measured, how they will engage with communities and how they build, let's say, responsible consumption of alcohol, right? And as part of that, when they started benchmarking vis-a-vis the Indian operations, whether it was water usage, which I think in India for brewing, I was pleasantly surprised is globally competitive and compares with the best that there is in the industry, right? If I look at our usage of thermal energy, it's almost 95%. If I look at electrical energy coming from sustainable sources, it's close to 40%. If I look at our packaging, it's not just potentially recyclable, but is actually being recycled in the form of glass or aluminum, right? So if you really look at all of these, I thought that it was not all doom or gloom, right? Whether you look at the product, you look at the conversion, you look at energy usage. So I thought that gave us a lot of confidence that we were in a position where sure we needed to improve, but the starting point was not all black, right? And I think there is a, to go back to the first part of your question, there is a, brew a better world strategy. And the fundamentals across countries are the same. How do you use raw materials in the most efficient way possible? How do you ensure that you get consumers a choice of a combination of good for you products and, give them a zero alcohol choice? So I think those fundamentals are the same. Different countries are in different stages of evolution, but we were not completely de-energized looking at where India was. In fact, it gave us a lot of confidence that given time, the right resources, the right technology, we could be the best of the best.
Thank you. Nalin, just to bring you in from, again, the global versus domestic investor perspective. I mean, Your earlier point about that the retail investors are not showing so much of great haste in getting into the ESG funds, but the institutional investment sides have started moving along there. What are some of the global investors' concern about ESG India?
So the biggest area of concern is on the environment, on water usage, on energy usage, like Rishi mentioned, on emissions and things like that. Social matters are perhaps the least concerned, and governance, of course, is a deal breaker for people. But the biggest area of focus is on the environment.
So the last question before we throw it to the audience, Shruti, I'll come to you. Regulations versus spirit of regulations. I mean, the regulators come with a bunch of regulations, and smart lawyers come with a bunch of tick marks, what you do. Where do you actually move away from just regulation to actually following the spirit of regulation?
So, to my mind, I perhaps look at the regulatory environment for ESG slightly differently. I think, most regulators across the world, definitely SEBI, is likely to leave it to the spirit of things only. I doubt you will be in a situation where any regulator globally is going to get prescriptive about what they want to find, what they don't want to find. It is likely to be a scenario where they will lay out the land in terms of what is the principle based on which they would want to see reports put out there. We should also be clear that unlike, say, credit rating agencies, where, and a lot of them are perhaps facing problems today largely because the reports are concerning a material event that can lead to a plummeting of a stock at a particular point, right? ESG has a various set of softer factors that may not have such a sudden big impact, 90% of the time, can't have such a sudden, kind of a death knell on a stock, and perhaps the regulator is going to keep that in mind when they get a little more principle-based about this. So I think the answer to your question is it's not tick the box, but it'll definitely be the spirit of the law alone.
Thank you. So now we'll open it to the audience if there are any questions. I think we've covered all the topics from ESG perspective, right from compliance to culture to values to behavior. Can somebody get a mic, please?
So, I think ESG compliant companies mostly, I understand, are in the large cap companies, and the investors who wanted the growth in their capital appreciations would look for the mid cap and other cap companies. So, if he is investing in the ESG companies, he's restricted his growth opportunity. Do you think so?
Naren, would you want to take this one?
So that is a misnomer, sir, for two reasons. One, I can think of many small and mid-cap companies in the listed space that have fantastic ESG scores. And I can also think of some of the largest corporate frauds and ESG disasters that have happened in the last 10, 15 years that have happened in top 100 companies. And I won't take names, but I think people know some of the incidents that I'm talking about. So it's not the case. It really is company by company specific.
Any other questions? Great. So thank you so much. Lovely discussions. Thanks to each of my panelists.